What a crazy performance for Netflix today in the stock market. Their shares were up by over $84 per share, or roughly about 16.5%. This is after Netflix reported its fourth quarter of 2020 earnings report, and we're going to take a close look at what they did report and why the stock suddenly has caught fire and did so well in the stock market today. Let's get into it. Netflix reported its quarter 4 2020 earnings report after the closing bell on Tuesday, blowing away analyst expectation by adding 8.5 million new subscribers in the quarter. Well, one of the key catalysts for this success has been Netflix's massive international market expansion. The company added 7.7 million new users outside of the US and Canada in this quarter, with a whopping 4.46 million coming from the company's Europe, Middle East, and Africa region. Here's how the company performed in the quarter versus what analysts were expecting as compiled by Bloomberg. Company reported a revenue of $6.64 billion versus $6.63 billion expected. Netflix also reported earnings per share of $1.19 versus $1.36 expected by analysts. The company reported the global paid subscriber addition of 8.51 million versus the expectation of 6.03 million. In a statement, the company said it added 37 million paid memberships in 2020 and achieved $25 billion in annual revenue, a 24% increase year over year. With 8.5 paid net additions in quarter 4, Netflix crossed the 200 million paid memberships mark. Netflix's stock price in recent months has been a victim of its own success. The company was one of the biggest beneficiaries of the lockdown and closures of entertainment venues caused by the pandemic. In the first 9 months of 2020, the streaming service added an incredible 28.1 million paid subscribers, outpacing the 27.8 million it added in all of 2019. But that dramatic increase in new users early in the year meant slower growth in quarter 3, with the platform adding just 2.2 million new subscribers compared to the expectation of 3.3 million subscribers as expected by analysts. As a result of that, Netflix's stock price fell 4.5% between the quarter 3 earnings report and the quarter 4 earnings report, compared to the S&P 500, which gained 9.4% in the same period. Still, analysts were upbeat coming into this most recent earnings report. Netflix did definitely take advantage of a lot of their original contents, and many of which are international contents, driving a lot of subscription and viewers to Netflix to watch those shows. Shows like Germany's Barbarians and South Korea's Sweet Home are driving consumers to Netflix and even translating to hits in the US. What's more, the French series Lupin recently was among the top 10 most popular shows in the US, topping out in the number 2 slot. According to 𝗖𝐋𝐈𝖖𝐊 from UBS Global Research, they view Netflix original local content as one of the key differentiators and competitive advantages, especially given the discount of international content versus domestic content. Looking forward, we remain positive on the long-term prospects for streaming media and Netflix's respective role in it, said 𝗖𝐋𝐈𝖖𝐊 from UBS Global Research. Thank you, everyone. I hope you found this video beneficial and you gained something of value from it. Let me know, do you own shares of Netflix in your portfolio? What are your thoughts about the stock of Netflix and its prospects? Would love to hear from you. Be sure to leave a comment down below and let me know what you think. By the way, don't forget to subscribe to Moementum channel. Here on Moementum, we post weekly videos about stock market investing, finances, and financial freedom. Thank you, and I hope to see you next time.